Hello friends, today I'm giving you an update on Exxon Mobil, ticker symbol XOM. We'll be looking at the performance of the stock in the last couple of months and years. Then we'll jump into the latest earning report and what analysts are expecting coming up. Then we'll jump into unupdated fundamentals of the last 10 years, and we'll try to come up with a fair value for this stock. Welcome to Money Talks with Martin Reyes, where we learn to take care of our money and find great companies at great prices. ExxonMobil is a oil company. If you want to get a little more information about where they are exploring and a little more overview of the company, I'll leave a link on the description of my original video in which I talk a little bit more about it. In the last 5 days, ExxonMobil is pretty much flat. In the last month, it's been up 5.6%. The last year is down 5%. And in the last 5 years, is up almost 38%. Something that I discussed in the other video too is that they are looking to, I think they are buying Pioneer Natural Resources, and they reported also great production so far. So if you are hoping to own this company, I will also encourage you to be paying close attention to Pioneer Natural Resources, which that will be ticker symbol PXD. I used to own ExxonMobil, and I am not owning it anymore. Part of the reason is because this is very close. This is more like a commodity play on oil, and the prices go up and down a lot. However, so for me, it's really hard to really predict where things are gonna go because they are very influenced by the oil market. So because they're a company that they're also produce oil. So, however, analysts think that there is a buy, and they are looking at a target price in the next 12 months of $127, which will make it a really nice 22.6% upside. They pay a nice dividend of $3.80, which makes it at 3.6% from the current price. EPS is $10.07, which makes it a PE ratio of a little bit above 10 times EPS. And looking forward, it makes it 12 times earnings of the expected earnings next year. When it comes to the earnings report that they reported on February 2nd, they beat on normalized EPS at $2.48. They beat by 27 cents, which is pretty nice. But when it came to GAAP, they actually missed by 13 cents at $1.9 of EPS GAAP. Revenue came at $84 billion, and that's a miss of almost $5 billion. When it comes to the next quarter, they're estimated to report at the last week of April, and they are looking for a lower. There's a lower expectation of EPS at $2, $1.99, and revenue also lower at 77, almost $78 billion. In the last 90 days, the EPS revisions, they have 12 downwards and 5 upwards. So I will encourage you to let me know what you think so far. I will encourage you to subscribe to my channel so that you can be, so that we can let you know whenever we post a new video. Let me know if there's any comments that you have about oil companies. Are you bullish on them? Are you bearish on that? Is that part essential on your portfolio? If you like my comments, please leave a like. leave a comment too if you don't like things, or if there's a better oil company or oil sector company that you think we should be taking a look at. When it comes to revenue per share, this is part of the reason why I don't like commodity companies that are very close to commodities, because as you can see, they're very cyclical, right? They go up and down, up and down, up and down. And it's very hard for an investor like me to kind of predict the future and see where they're going. I think there are better companies, not better companies, companies that are more easily understandable and predictable, that are producing great numbers, that at least I would prefer to invest on them other than like Exxon Mobil. In the last 5 years, um, it tells us that it has grown at 5%, and the last 10 years, it's compounded down to less than 1.2%, and that is a little bit deceiving numbers because they're very cyclical, as you can see here. Gross margins average in the last 5 years is 22%. And this is part of what I don't like about these companies, because that gross margin, they really don't have that much margin. So if prices go up or go down, or if cost goes up, it really starts affecting their earnings. And as you can see here in their earnings, they only went negative on 2021, which is good. A lot of other oil companies, they have more negative EPS years than this. But as you can see, their numbers are cyclical. They are a little closer together, which is good for trying to figure out the future. This tells me that they have a good margin, good management. But if you look at, I, it says that the last 5 years they have grown at 15%. That is deceiving because of the because it's very cyclical. It has not been growing close like up in a regular way. In the last 5 years, they have grown 3%. This is part of the problem that I have figuring it out, and stable growth. Profit margins 7%. That's really really low, and that's something also that I will be worried about. When it comes to free cash flow, they experienced a lot of free cash flow on 2022 and 2023 after the pandemic, after the reopening. Reopening economies, they need a lot of oil to kick into gear. Before that, it was barely getting to the $4 per share. So these growth rates also are a little inflated. Free cash flow margins at 5.6%, that's really, really low. However, with these numbers, because these get very, very affected by the late numbers, it shows a free cash flow yield of 5.7%. I would not believe that number. And this is where I have problems with this company, because there's a lot of numbers, a lot of guessing that I really can't use to really figure things out. Book value per share has been growing at 2% in the last 5 years, and about the same on a little bit higher on the last 10 years. Dividend has been growing slowly, five in the last 5 years at almost 2.5% year over year, and the last 10 years at 4%. Yeah, and the payout ratio right now is pretty nice at 37%, but that has a lot to do with the high free cash flow yield that they're producing right now. Once again, that also gets a little bit affected by that, close to 1.5%. If we were to go back and look at an average of maybe $3 free cash flow, that will put this debt payable in 3 years, which still not horrible. It's pretty good. When it comes to the earnings per, outstanding shares, they have been buying back and then going up, and I think they're gonna go up again because of the acquisition of Pioneer National Resources. Yeah. So, but with the current numbers in the last 5 years, if they have bought back a little bit over 1%, and then in the last 10 years, a little less than 1%. When we put all the numbers together, you can see them over here. I discussed most of this side already, but yes, you can see the trailing 12 months return on equity has grown, has almost doubled to almost 21%. Same thing with a return on assets, have almost double at 11.2%, and return on invested capital has grown from 9% to 18%, which is pretty good. Gross margins have grown a little bit too. Same thing with profit margins and free cash flow margins. So that is good. The question is, can they hold that in the long term? So now, like I said, I am not a financial advisor. I am not investing in this company. I am not advising you to whether to invest or not. Everything I say here is for educational purposes. It's just my opinion, and I would love to hear your opinion. Do not make any financial decisions based on my comments. Do your own due diligence. When we look at them, if we were to look at what historically Exxon Mobil multiples have been paid by the market, that will put a fair price of the stock right now somewhere between $63 and $85. When we use the revenue-based valuation, which this will be if ExxonMobil were to be a little more regular, which they're not, that's cyclical, so that will give us a fair value today at $68 per share. If we do the discounted earning valuation, we're looking somewhere between $45 to $85. Payback time somewhere around 110 to 170. The discounted cash flow valuation, it gives us, and yes, I am using a 0% growth rate, and the reason why I'm using that is because I just see them as flat. They just are cyclical, going up and down, and that's part of the reason why a lot of these numbers are low. Will be somewhere between $50 to $76. And the other reason why the numbers are so low is because I do all my calculations expecting 15% minimal return on this investment. I will not be using owner's earnings valuation for this kind of company, just because it just doesn't work very well with them. Whenever we put everything together at fair value, will be somewhere between $82 to $97 per share. Even if you were to use to the $97, that will be low. Once again, this is with a very pretty much almost no growth and a desired return of 15%. If you would like to do your own numbers and change some of these things, you can go to the Buy Me a Coffee link in the description and get yourself this wonderful valuation sheet that I have there for you to purchase, or you can just buy me a coffee, and I will appreciate that. I'm not putting a margin of safety just because I'm not planning to buy it, and so yeah, that would be those are the numbers that I have. I hope that you leave me a comment, that you subscribe, and let me know how I did. I'll see you in the next video.